Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 13th of July 2019 and we're providing our gold and silver weekly update for the week ending the 12th of July. This will be a longer than normal update as we are also incorporating an analysis of Jerome Powell's Congressional testimony earlier this week. Gold rose $16 last week from $1,399 to $1,415, having hit a high of $1,425 and a low of $1,387. In sterling terms, gold finished the week at £1,126. That's up £8. And in euros, it closed at €1,255. That's up €9. Silver rose 23 cents from $14.99 to $15.22, having hit a high of $15.31 and a low of $14.96. In sterling terms, it closed at £12.11. That's up 14 pence. And in euros, it closed at 13.50 euros. That's up 0.15 euros. The gold to silver ratio fell very slightly from 93.3 to 1 to 93 to 1. The Dow Jones closed on Friday at 27,332, up 243 points on the day and up 410 points on the week. And the Nasdaq closed at 8,244, up 48 points on the day and up 83 points on the week. And the S&P 500 closed at 3,013, up 13 points on the day and up 23 points on the week. Brent crude rose $2.49 from $64.23 to $66.72, and US light crude rose $2.71 from $57.51 to $60.21. The dollar index stands at 96.81. That's down 0.47 on the week. We ended last week's video with the comments, quote, "So we believe there will be lower gold and silver prices next week, but no significant move until the interest rate decisions are more predictable for July," unquote. Well, gold prices opened down, fell to its lowest level on Tuesday, and then rebounded, primarily on the back of Fed Chair Jerome Powell's Congressional testimony. So let's take a brief look at what he had said. Firstly, that the economic outlook hasn't improved in recent weeks. Quote, "The bottom line for me is the uncertainties around the global growth and trade continue to weigh on the outlook," unquote. This immediately resulted in a rise in stocks and a fall in bond yields, as expectations of a rate cut this month was all but admitted. He added that economic momentum has slowed in some major foreign economies and that trade developments, the federal debt ceiling, and Brexit need to be resolved. He also expressed concerns over weakening inflation. Longer-run challenges such as workforce participation rate is lower, and relative stagnation of low to middle income levels need to be addressed. Also, ways to boost productivity growth should remain a high national priority. He then embarked on giving a brief history of the Fed interest rate decisions, not to move rates in 2019, pointing out that the FOMC maintained the funds Fed rate of 2.25 to 2.5% in the first half of this year, and that they would watch the data closely and remain patient. In May, whilst they saw cross-currents adversely affecting the market, they could see that things may improve. But more recently, the data has proven otherwise, with growth indicators around the world continuing to disappoint, resulting in a consequent drop in business confidence, all of which could affect the US economy. So these remarks have given a very strong indication that interest rates will in fact fall in July. A brief look at the minutes summary of the Federal Reserve's June meeting states, quote, Many Federal Reserve officials said they would be willing to cut interest rates if risks and uncertainties continued to weigh on the economic outlook, unquote, which is exactly what Jerome Powell has said has happened in his testimony this past week. Now, frankly, our opinion is that a rate cut in July is too soon, and they should wait until September. However, the pressure on the Fed is considerable, not least coming from the White House and the need to maintain a buoyant stock market, which is one of the few areas where economic success can be visibly appreciated. Also, from a banking and economic perspective, it could be viewed as good risk management, as it would help cushion the effects of possible future adverse shocks to the economy. So we can expect an interest rate cut of some 0.25% on the 31st of July, and the markets have now factored this in. In fairness to the Fed, they can afford to do this. We say that because, unlike the UK, where interest rates are just 0.75% and the European Central Bank interest rate is 0%, the US can afford to reduce rates by 0.25% some 9 or 10 times before that 0% rate is reached, which is why it embarked on a policy of attempting to raise rates of up to 3%, but didn't quite get there in recent years. The question, of course, on everyone's lips is how aggressive the Fed will be in reducing rates. Will we see a 50 basis point fall and then a pause, or perhaps a couple of 25 basis point reductions? We envisage the latter, though of course we do not have the same access to the data the Fed has, or at least not at the same time. Of course, on the back of this, both gold and silver prices rose as the dollar weakened in anticipation of a rate cut, which is why the dollar index has fallen by 0.47 on the week. What we should note, however, is that gold closed on Friday up almost 1.2% on the week for its highest weekly close in almost 6 years. From a technical analysis point of view, support is seen near the 10-day moving average of around 1,405 and resistance at just shy of 1,440. It must not go amiss, however, that the short-term momentum is negative, as the fast stochastic accelerates lower, and the medium-term momentum is at best neutral and at worst negative, as the MACD prints red with a downward sloping trajectory. Silver markets attempted a rally with a strong support level at $15 and potentially equally strong resistance at $15.50. We can envisage quite a bit of toing and froing with silver, as any weakness in the dollar will strengthen prices, while at the same time any weakening in the industrial economy will have a downward effect on physical silver demand. As we have said quite often in the recent past, if you are underweight in silver, it's potentially a good time to buy on dips. With regards to those who buy gold and silver in sterling, we said in last week's update, quote, "We're still quite concerned that sterling has a little further to fall until the Brexit situation is out of the way." Unquote. How prophetic that was when we saw sterling fall to one of its lowest levels for over 2 years, and we attach a link in the description below to our YouTube video entitled "Sterling Falls This Week and Gold is Only £55 off its 2011 high." If you haven't already heard it, please do listen to it. On the economic data front, we saw on Thursday that the Consumer Price Index for June rose to 0.1% against an expectation of 0%, and core CPI rose by 0.3% against an expectation of 0.2%. And we also saw on Friday that the Producer Price Index for June rose 0.1% against an expectation of a decline of 0.1%. So what can we expect to see next week? Well, on Tuesday we have retail sales, import price index and industrial production figures for June. On Wednesday, housing starts and building permits for June. And on Friday, consumer sentiment for July. So Tuesday is probably the most important day for economic statistics, and will be viewed through the lens of whether rates are likely to be reduced by 1/4 or 0.5% on the 31st, though our view, again, is that the former is more likely. So in conclusion, it's a similar story to last week in that China and Iran are important, and the Fed having given its clearest indication so far of an imminent rate cut, it will now be a wait-and-see situation. We suspect that geopolitics will play a greater role next week because of the absence of much economic data beyond Tuesday. Finally, to all Inner Sanctum members, at long last we shall be able to publish our recent design merchandise, which will be available on the website from Wednesday next week, with discounts available to Silver and Bronze members. We wish to add that we are offering these as a token of affiliateship as opposed to attempting to make money from them, as many members have requested that we produce some branded merchandise. The Illuminati Silver Coin and Bar will be available from October, but we hope we can introduce it in September, but it's really down to the manufacturing process. Either of these, each silver member who has stayed with us for 12 consecutive months will receive for free, so it'll either be a coin or a bar, and others can obtain at a discount. Again, it's more about brand affiliation and collection as opposed to us being involved in the sale of precious metals, as we fully intend on maintaining our objectivity as opposed to encouraging profiteering from precious metal sales. Also each week, members will be able to log into the website and the Discord channel and listen to a weekly podcast between Controversially Greg and Journal Marcus on a range of subjects, and we have further podcasts with other luminaries very soon. We also draw to members' attention our premium podcasts or videos, which will now start rolling out in quite a large stream, as the author moved house this past 8 weeks, which has reduced the number somewhat, but the deficit will be more than made up. All that remains is to wish you all a most pleasant weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.